Nigeria's industrial future hinges on a balanced, protectionist strategy that strengthens local production, safeguards emerging industries, and reduces import dependence. The Center for the Promotion of Private Enterprise argues that strategic protectionism and indiscriminate liberalization is essential to build competitiveness, conserve foreign exchange, and create jobs. Backing the recent 15% import duty on refined petroleum products, CPPE contends that such calibrated measures could restore Nigeria's manufacturing base, revive domestic refining, and set the foundation for sustainable, self-reliant industrial growth. Dr. Muda Yusuf, CEO, Center for the Promotion of Private Enterprise, joins us now. Good morning, sir. All right, I think the question in everyone's mind right now is who benefits? The people, is there a particular company, or, who benefits from this 15% import duty on refined petroleum products?
Well, the economy benefits, the people also benefit, investors benefit. Because the whole idea is to ensure that we stay on the course, on the path of sustainable industrialization. And there is no economy that prospers without industrialization. Over-dependence on imports has done so much damage to this economy over the last 2 to 3 decades. And there is no sector where this is very graphically manifest as in the downstream oil sector of the economy. That is why today, all the 4 refineries of the NNPC have been moribund for close to a decade. This is the kind of damage that too much dependence on imports can do. And that is part of the reasons or the factors that have brought the economy to the stage in which we are now trying to salvage it. So for me, if you are not just looking at taking a short-term view of the economy, we are looking at a medium to longer-term view. We are looking at economic security. We are looking at job creation. We are looking at economic sovereignty. I think the way to go is to protect domestic industries. And this is what has happened with this new tariff that has been proposed to kick off maybe in another 3 weeks or so. So I believe it's a very good policy. And it's even more so when you have the capacity for domestic production. You already have a huge capacity, and I'm hoping that the capacity will even continue to grow based on the promise that has been made by Dangote and based on the commitments of NNPC to also resuscitate its own refineries. So I think it's a good policy that deserves to be supported.
All right, you've mentioned a couple of companies there. You've also mentioned that the people benefit long term, but immediate reactions trailing this announcement, whenever you hear tariffs, taxes, it also means prices are going to go up, right? Experts are saying that prices could go up 150% on petrol. What are your thoughts on that, especially the short-term impacts? The long-term you've established this is good news, but short-term, in the next couple of weeks when it will be implemented, what is the immediate impact on the people?
Well, the immediate impact may not be as severe as is been, projected. I say this because the Dangote refinery, for instance, has the capacity to fill the gap. Because people talk about high price because they feel that once the import price goes up and there is no commensurate domestic supply, to supply at a reasonable price, then the prices will go up. But what we are dealing with here is a situation where we have the domestic capacity to fill whatever gap may arise or to neutralize whatever effect that this 15% may have. Dangote refinery has capacity to deliver up to 40 million liters of PMS per day. it also has similar capacity for diesel. So if we have this tariff, what it will do is that it will improve the patronage of what is produced domestically. And it's not only Dangote. Let me also make the point. This is a sector-wide policy. It's just that the Dangote refinery is the most prominent in that space for now. But if the NNPC refineries also comes on stream, that will also boost supply. But even as we speak, the Dangote refinery has the capacity, to deliver in terms of adequate supply at a reasonable price, even possibly even less than what we have now. And in addition to that, we have a couple of modular refineries that are producing diesel as we speak. And we also have a couple of investors who already have licenses and so on. So the short-term effect is not going to be as profound or as painful as is being projected by some of those who are opposed to this new import duty. And in any case, when you look at what is happening with respect to this import duty compared to what is happening to other sectors, because generally, when you talk about industrialization, particularly in a developing economy, you cannot avoid protection. If you look at all the countries that have actually industrialized, whether you are talking of China, you are talking of Malaysia, you are talking of even Japan, and many other countries, particularly in Asia, most of them have enjoyed protection at some early stages of their life. And even now, the United States, which is the largest economy globally, is now adopting the policy of protection to ensure that there is more production within their own country. So if a country as big as US is protecting its own industries, what will you now say about a developing country like ours? So the short-term challenges will not be that pronounced because the capacity already exists. So that is the assurance I think I can give. And that is the assurance that Dangote industry or Dangote refinery has given. And that is the assurance that the government also have been given. So I'm optimistic that the situation will not be as bad as some people are experiencing or some people are thinking of.
I appreciate your optimism, and it's all provided that we're able to meet, domestic supply is able to meet the local demand. But what would you say this development does to arguments around monopoly? And how can we, accommodate this protectionism? How can it coexist with fair competition and innovation at the same time?
Well, protectionism is good, just as I said, for industrialization. Because over the last decade or two, we have witnessed what we call deindustrialization. Many of our factories have closed shop completely. They have been shut down. Many of the factory premises have been taken over by event centers. Some of them have been taken over by churches. Some of them have been taken over by supermarkets. That is not the way our economy should be going. That is not the kind of trajectory that we want to see. We want to see a reversal of that. And when we talk about monopoly, first, the space is open for people to invest. Currently, we have more than 30 licenses that have been issued for people to invest in refineries. Some of them have started doing some work. Some of them are just holding on to the licenses without doing anything. Currently, we have some modular refineries that are refining. Currently, we also have 4 refineries that are owned by the NNPCL. So these are potential competitors, not even potential. Some of them are actual competitors. But when we talk about competition, it is not appropriate to be talking about competition between a domestic producer and an importer. That is not fair competition. Fair competition is when you operate in the same environment, in the same context, and you face the same challenges. That is true competition. But when somebody is producing locally, dealing with all the domestic challenges of production, dealing with infrastructure issues, power issues, logistics issues, and all of that, and somebody wants to go and be importing, and we say that is competition, that is not fair competition. Fair competition is for manufacturers to be competing with manufacturers, not domestic manufacturers to be competing with importers. That is not the way to progress an economy. So as far as competition is concerned, the space is open. Nobody is preventing any other person from investing. The NNPC refineries will soon come on board. And in addition to that, there are institutional mechanisms to curb abuse of whatever looks like market power. That is why we have the Federal Competition Commission. If there is any evidence of exploitation based on market power or monopoly powers, the FCCPC will step into it. So there are safeguards already, to ensure that there is no exploitation. But when we talk of competition, it is not appropriate to be talking about competition between somebody is producing locally and somebody is importing. That is not fair competition.
Okay, so this policy, from your perspective, somewhat levels the playing field?
Yes, of course. It offers some level playing field because the challenges of domestic production is much higher than the challenges of importation. So you need to protect those who are producing locally so that the importer don't have unfair advantage over them. And we have seen that even with some industries already. If you look at the flour mills are thriving today because they enjoy protection of up to 60%. We are not even talking of 15% now. 60% to protect the local flour millers. If you want to import flour now, import charges is up to 60% of the cost of your import. That is to protect the flour millers. The same thing with cement. If you want to import finished cement, bag cement now, you import charges is over 50%. If you look at the pharmaceutical industries, in fact, their own is not even about import charges. It's about complete ban on importation of some pharmaceutical products that you can produce locally. For instance, paracetamol. If you see any paracetamol in Nigerian market today, it's a contraband. If you see any multivitamin in Nigerian market today, it's a contraband. Because we have domestic capacity to produce that in the pharmaceutical sector. You have similar protection in the iron and steel sector. Almost up to 50%. The same thing with vehicle manufacturing. That is up to, if you add the duty to VAT and all of that, you are talking about close to 30%.
All right, Doctor.
So for every line of manufacturing, there is some level of protection. So this 15%, when you compare to existing protection measures in other sectors, is still much lower.
All right, let's come back to the petroleum sector. You have highlighted that long term, right, there are industrial gains, but short term there may be slight pinches, but domestic supply could meet those demands. How do you think, or how do you believe or recommend that Nigeria balances the short-term price increases with long-term industrial gains? Because Nigerians obviously have been through quite a bit in the last couple of years with the wave of reforms and policies.
First, there has to be engagement with those who are the major domestic producers, particularly Dangote, to ensure that the fears are mitigated. Secondly, is for the government to support domestic refineries. There has to be fiscal policy support. There has to be possible infrastructure support. There has to be incentives in order to strengthen productivity and improve their supply. That is very key. If you support domestic production, of course, we will get to a point where we'll be net exporters, just as we have seen in cement and in some other sectors of the economy. So what is needed is to create the right kind of environment to support domestic production, so that the productivity level can increase and they can enjoy more economies of scale and the unit price will drop. But the good thing about this particular sector is that we already have very huge capacity, to deal, to address demand challenges. So I think that is the comfort that some of us have about this. And in addition to that, we need to look at the larger picture. If you are talking about conserving foreign exchange, before now we are spending almost a third of our foreign exchange or foreign exchange earnings on importation of petroleum products. So we need to conserve foreign exchange. So with this kind of policy, we will see much more conservation of foreign exchange, and that will help to even strengthen the currency. You can see what is happening to the currency now. You can see the improvement in the strength of the currency. And you can see the impact of the improvement on the currency on even prices, generally, apart from petroleum products. So there's a huge macroeconomic benefit, from looking inwards. In addition to issues of job creation, in addition to issues of some of the byproducts that you even get from the process of refining. They are talking about even things like polypropylene. They are looking about the associated petrochemical industries, which will also produce more raw materials for manufacturing sector, particularly in the area of plastics. I know how much plastic we consume here in terms of packaging and all of that. So there's a whole lot of multiplier effects that will come from this. But as for pricing, I think the challenge of pricing can easily be mitigated by the fact that you have the capacity and by the fact that the Dangote refinery itself is committed to ensuring that this hike in price does not happen.
All right. Let's hope that these protectionist policies, they remain performance-based and they benefit not just industries, but the people as well. Thank you very much for your time on the program today, Dr. Muda Yusuf, CEO, Center for the Promotion of Private Enterprise.
Thank you very much. Thank you for having me.
Our pleasure.